going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort, and China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
Mohammed, let's talk for a quick sec about crypto, because we've been debating this now for years. I'm curious, in 2022, if what you're saying is right, does that mean people go out on the risk curve and that something like Bitcoin is a great investment? Or do you think that they actually do the exact opposite? We're right now, by the way, at about $48,000, a little under $48,000, $47,000 for one coin.
Andrew, it depends on what you think of regulation. I'm hoping that this will be the year in which the crypto industry and the authorities in the US in particular speak to each other and use a common language. And this is really critical because China is taking massive steps forward in this space. They're doing it differently than what the US would do, but they are starting to have an impact on global standards and how people think about this. So the big hope is this year, two parts that have not been talking to each other, that haven't even been talking the same language, would listen to each other and try and meet in the middle in order for us to have a common view on what the future of crypto is. If that happens, then the future of crypto is going to be much brighter than what it is now, because right now you have this big regulatory overhang, big cloud over your head.
Welcome to the Crypto Teacher. And guys, I come back with that video just to make you think. And we know 2022 is going to bring in regulation, which is so important. We know ISO, but we know the regulation is going to be global. We also know China has that CBDC ready this quarter to start their global takeover over the next 3 years. They're going to lead in the fourth industrial revolution, and the United States is going to follow. Do not fall for the Hegelian dialectic. We already know what they're going to do. China's digital yuan gives them total surveillance over the people. We don't want that in America. While inflation is going to eat at the dollar. Remember, problem, reaction, solution. While China's people are going to rise up out of poverty in the middle class, because they'll be able to airdrop free money. And then it comes to America. As we see all types of UBIs being tested inside of America, universal basic income. That's to bring on the free money. So robots, algorithms, and drones can take over the economy while you sit at home inside the metaverse. And we know 2022 is going to be big for the stock market. I'm going to start back doing videos on the stock market channel because this is going to be a big year going forward, because we know they want to get rid of this legacy market, tokenize it, and put it on blockchain. We know the Fed and the big banks pump the actual stock market. Why? We have buybacks and then we have free money. We know that's going to start ending. We know what the New World Order wants to do. It's time to build this fourth industrial revolution. And remember, the Crypto Teacher told you, because he knows when it comes to the New World Order, it's all planned out. You have a wonderful day.
With the Fed likely to raise rates this year, there's some concern about how stocks will fare. Senior economics reporter Steve Leisman joins us with a look at something that could significantly offset the Fed's action. Steve?
Mike, good morning and Happy New Year. Federal Reserve rate hikes, inflation, the impact of the virus all weighing on the outlook for equities this year. But what may not be well appreciated, stocks essentially have a built-in hedge. As inflation rises, so too do corporate revenues, pumping companies full of cash. Wharton professor Jeremy Siegel, he was on Squawk Box on Friday, and I talked to him afterwards. He offered up this chart showing that dividends from S&P companies have outpaced inflation over the long run. As inflation rises, dividends go up, so do share buybacks. He told me the long-term history is that earnings and dividends go up with the price level, both in high and low inflationary times, not year for year, but over the long run. The S&P Total Return Index shows that companies have been able to keep pace with inflation and then some throughout most of this pandemic. And this has happened even though buybacks and dividends, they've not kept pace with the increase in free cash flow. So according to Jonathan Golub of Credit Suisse, in the year ahead, Golub thinks that there's substantial scope for the return of cash to shareholders to increase. But he thinks that that's going to be more true for old line manufacturing companies rather than, interestingly, for technology firms. Now, Barry Knapp of Ironsides, talked to him too. He told me corporate cash levels are quite bloated, and if they can't use the money, they generally do give it back. Higher dividends and buybacks won't offset every risk factor, of course. Valuations overall could take a hit if the Fed is forced to do more than is currently priced in to contain inflation. But the cash flow to corporations has been keeping pace with inflation, Mike, and so too should the return of that cash to investors in 2022.
Yeah, it's a good reminder. Nominal growth, inflation plus real growth is something that helps. Companies in general and getting cash back to shareholders. But I wonder if the absolute level of inflation is a relevant factor here. In other words, we were just running around 7%. It's not always right. If that were sustained, it might be a different story.
So Siegel says in all inflationary environments, over time, it does even out. Barry Knapp is a little more concerned. What he says is we need inflation to come back down into that 4 or 5% range. Of course, lower would be better. But as long as it's contained in that range, companies should be able to profit. And especially both these guys, a bunch of you guys say manufacturing companies, because they have more fixed costs than the tech companies. Mm-hmm. And they think that when those fixed costs stay the same, don't go up as much, that the revenues go up more. And so they end up having more cash to give out to shareholders.
The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID 33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.